Welcome back to the Trade with Resolve channel. If you're new to the channel and interested in viewing live day trades, platform tutorials, or learning basic trading terminology, then please consider subscribing to the channel. In this video, we will cover the difference between day and GTC orders. And this is a question that I received from NP. NP asked, when you place the order right after the limit or market order, it says day or GTC. Can you please make a video to explain that function? Would I just use day for day trading? Alright, so there are a couple of different order types that you can choose from. So for example, let's say we are taking a look at SPY. So we can see here that SPY has made a nice move to the upside. And maybe we're interested in taking a long position if we get a retracement back to this general level. So what you can do is consider placing a buy limit order at a specific price level. So for example, maybe we want to enter in right here at 313.85. So what you can do is go ahead and place a limit order. So this here is the option chain window, but let's say you're interested in buying shares of SPY. Let me bring over the order ticket window for SPY. So let's say you were interested in buying shares of SPY. Now, depending on your broker, your order ticket window will look a little different, but it's still the same concept. So let's say we want to buy shares of SPY. You enter in the ticker symbol, and then you can select buy. Enter the quantity, so let's say you would like to buy 100 shares of SPY with a limit order, and we're going to place a limit order at 313.85 because that is the level that we determined we were interested in buying at. Now here we go, day or good till canceled. So which order type should you choose? GTC stands for good until canceled. So if you choose a day order, it simply means that if your order is not executed by the end of the trading day, your order will be canceled. So it's only good for the day. The stock market is open from 9:30 a.m. until 4 p.m. Eastern Standard Time. So if the price of SPY does not reach $313.85 before the end of the day, which is 4 p.m. Eastern Standard Time, your order will automatically be canceled. So if you choose GTC or good till canceled, that simply means that there is no expiration date for this order. So let's say we enter an order at 313.85 as we have done here. If the price of SPY does not meet that level by the end of the day, your order will still be pending because it hasn't been executed. And if you would like to cancel the order, you can do it manually, but the system will not cancel the order for you. So there's only two options. The order will be filled at 313.85 if the price of SPY reaches that level, or you will have to cancel the order manually. So for example, if you are a swing trader and you are certain that this is the price point you want to buy at, then you would simply place a GTC order because you're looking to buy shares of SPY at 313.85, anticipating the price to continue higher over a longer period of time as a swing trader or long-term investor. And so that is the difference between day versus GTC. Again, a day order is canceled if it is not filled by the end of the trading day, which is 4 p.m. Eastern Standard Time. So the system will automatically cancel that order for you if the order isn't filled. With the GTC order or good till canceled order, the order has no expiration date and it will remain as a pending order until your order is filled or you manually cancel the order. I hope you found value in this stock market terminology video, and if you did, please consider subscribing to the channel and giving the video a like. Thank you so much for watching, and I look forward to seeing you in the next video.